Evan, creative finance guy. Man, I'm stoked to talk with you today. Tell me exactly what you do.
Number one, I help solve big problems by buying houses creatively. So, what does that mean? I would put it kind of in a category of one, people that don't have a ton of equity in their house. So maybe they just bought the house, 2 years ago, a year ago, and had a job relocation or going through a divorce, or there could be several things that are going on, right? And maybe they're going to have to cut a check at closing to sell their house after all the fees, right? So for me, I come in and basically just take over their existing payments, take that burden off of their shoulders, and then from there, whether rent out the property or help someone on buy a house creatively, that's really what I look to do. The other category I would say is like someone that has a ton of equity, right? Because it's not always that side. Would be someone that's stuck on a price. Let's say they want $300,000 and the market's just not giving them that, but they're like, hey, I don't need the money right now. I would like to be able to just have this price and I just want the thing sold. And agents, maybe they're having a hard time selling that. I can come in and say, hey, instead of me getting a bank loan and paying you off, how about you just be my bank, right? And then I would say the third thing that I do really is helping people that whether they have bad credit or they've had something in the past that's keeping them from buying a house traditionally, I can help them actually get into a house by selling to them under finance. So those are really the three things I do.
So that's awesome because there's more than one way to buy or sell a house, and people don't understand that. It's called creative financing for a reason. People think the only way to buy and sell a house is going to a lender, getting a realtor, and then putting it on the market or going and looking at houses. But that poses a problem for a lot of people because they can't get financing, so they can't buy a house. Maybe something happened with their credit, or they don't have enough down payment,
Right.
or the interest rates are through the roof like they all were last year. And then for sellers, like you said, sometimes you got to sell it quick within that 2-year period where you have to pay capital gains tax. And so you're going to come out of pocket to sell the house after realtor fees and everything.
Yeah.
So those people are stuck too.
It's tough.
So those deals are called subject to, correct?
Correct.
Yeah.
Yeah.
And I'm saying this for everybody out there because we're trying to teach y'all. You know what I mean?
That's right. Yeah, you're buying the house subject to the existing mortgage. already in
Subject
place.
to the existing mortgage already in place. So the mortgage stays in place, and then we come in and we take over those payments.
Correct.
And then we can put money in the seller's pocket if they need, to get up on their feet to transition to the next step.
Right.
Generally, right?
Right. And if it's on the market, I pay the agent full commission.
And the agent gets full commission.
Yeah.
See, so I know as an agent who kind of started in this world before going to what I call the retail side. I started in the wholesale side. I know a lot of agents have a lot of reservations because they get a lot of phone calls from these lowball cash offers. And so the sales resistance is up and they don't want to deal with it, which are generally they're legit a lot of the time, but they will be low. And those aren't for everyone. Those are for people that need to move a house quick. They're distressed. They got to go. If a person doesn't have to sell now and they're open to creative financing, this would be a great situation for them.
Yeah.
Right?
Absolutely.
Awesome. Tell me a story about how you help somebody do this.
Okay. Yeah. So we can start with subject to. So actually my first deal that I did. So I basically had called somebody that had tried to sell their house. So it was an expired listing, and I saw that they didn't have a ton of equity and they just bought the house. I think it was like a year ago. Okay. So I called them up and I said, hey, I saw that at one point you were trying to sell your house with an agent and I saw it was taken off the market. Were you still looking to sell that? And they were like, absolutely. Like our agent wasn't able to get it done. Right. And I said, well, why?
Probably because it was priced too high.
Right. Exactly.
Not
right.
that the agent wasn't getting, probably because it was priced.
And it wasn't the agent's fault. It's that they didn't have equity. And so why did they have it priced too high?
Because they had no other choice.
They had to. Otherwise, they're going to cut a check, which is a check they didn't have to cut. And so, I basically just said, hey, instead of you cutting a check for $10,000, $15,000 to sell your house, and they wanted to move to Wisconsin, they had family down there to be able to watch their baby and grow up, and that's like really what they wanted to do. They had jobs they were waiting on down there, and they just couldn't move. And so I said, how about I take over your existing payments, and I pay you a certain amount. I paid them $2,500 to be able to move and get the U-Haul and all that and get out. And I remember the week before we closed, they called me literally crying, and they said, Evan, thank you so much for helping me. We didn't even know this was a thing, right? And ultimately, that's why I'm trying to get this out there, because there's situations that, sure, it's not a fit for everybody, just like a cash offer isn't. But there's situations where you can change people's lives and like help them get to where they want to go just by understanding creative finance.
Right. That's powerful, man.
Yeah.
So instead of coming out of pocket, they were able to walk away
Right.
with $2,500 to start their new life.
Right.
Super happy.
And not have this mortgage hanging over their head and them trying to be landlords from 12 hours away.
Not everybody's got the landlord
No.
backbone in them. It's not an easy game.
I don't even have. So I hire property managers. I'm a softie. So
Yeah, that's
Yeah.
okay. That's smart.
Yeah.
You don't want to deal with the headaches either.
Sure.
What are some resistance points? What are some objections that you hear from either? Well, let's keep it to realtors, because
Yeah.
I really want to educate my realtor friends out there. What are some objections? Because I'll start with the first one. A lot of them don't understand how they can keep a mortgage in place in a seller's name
Mm-hmm.
and still take over payments.
Yeah.
Doesn't that put the seller at risk to you?
Yeah.
Like you're at their mercy? What do we do about that situation?
Yeah, that's a good question. And I think that people, I will just say this first. I think people, they think subject to is this weird thing where you can buy a house subject to anything. So I think it's important to understand. So you can buy a house subject to the existing mortgage in place. You could buy a house subject to an HOA lien. You could buy a house subject to judgments in place. You buy a house subject to the plumbing in place, right? So all of that is together, right? So I think that's important to understand, number one, what that actually means, subject to. The second thing I would say is subject to transactions happen all the time without people even knowing it, right? So all of a sudden it's kind of weird when it's an investor coming to a buyer, but what happens when you transfer the deed to a family member and say, hey, you know what? Like, you just keep making payments on this mortgage. That happens all the time. That's a subject to transaction, right? And so it doesn't have to be this weird thing. The only thing that makes it weird is maybe there's not trust that's built yet, right? And so to answer your question about the mortgage and the liability, absolutely, there is risk. And I think people need to understand what are the benefits and what are the risks, right? So if the mortgage is still in your name, right? The deed goes into my name. I'm managing the property. We set up something called a mirror wrap or wraparound mortgage, which essentially states I owe you the same amount that you owe the bank, okay? And they pay down at the exact same time. So what that means is you have an actual lien on the property. So let's say I stopped making payments and you're worried about your credit. Ultimately, you could repossess the house and I just wasted a lot of time and money. Does that make sense?
It makes perfect sense because, and another way to put it too, and I try to tell sellers this as well, it actually works in your favor if I don't make the payments.
It does.
Here's why. I'm going to take this house off of you so you can move on with your life. House is sold for the price that you want.
Yeah.
I'm going to end up cashing you out by refinancing within a few years, sometimes, for the most part.
Yeah.
So you're going to get the house off your hand. I'm going to put some money in your pocket for you to move on. If I stop making payments, guess what? You get to keep all the money I gave you, and you get your house back with all of the equity that I already paid down in. So you actually make out ahead of where you first started if I default on payments.
Yeah. It just doesn't make sense as the investor to like pay $20,000 total for closing cost, agent commission, right? Also cash to the seller, time and money, renovating, painting, to not make a $1,500 a month payment.
Right.
It doesn't make sense.
It doesn't make sense. I mean, but they'll say, well, what if the seller dies? Or what if the buyer dies? What if the investor dies?
Right.
Or gets abducted by aliens?
Hit by the bus.
Hit by the bus, right?
Yeah.
Well, it's the same thing. In
Yeah.
lieu of that, in a catastrophic, event,
Right.
that property just gets deeded right back. There's one caveat to all this, and it's called the due on sale clause.
Yeah.
What is that, and how do you get through it?
Yeah. So the due on sale clause, if you go into your closing disclosures of any house you buy, right, the lender has something called the due on sale clause. Now, there's several provisions underneath that, and people think it's just one that we're going to talk about. But another one is if a house is vacant for more than 30 days. That's technically a violation of the due on sale, right? And there's some other ones in there as well
So it's not just transfer of mortgage that
No.
causes a due on sale.
No.
It can be vacancy of house. It can be a lot of different things.
Right. And essentially what the due on sale clause was created for was, and I kind of give just some context, I think it's helpful. During the Carter administration, when rates were, 16, 17, wherever they were very high, right?
I thought last year was high.
I know, it's unreal. Yeah. And so people couldn't afford to buy houses with those interest rates, right? And so what people started doing was, hey, let me take over your 9% rate or 10% or whatever instead of me doing 16, 17%. But what started happening was some of these buyers that were buying the houses subject to were not qualified. And so maybe they stopped making payments or whatever, they couldn't afford the mortgage, right? And so the banks basically took it to the local courts and said, hey, they transferred the deed without telling us. We want to be able to accelerate payments and basically get our money back, right? That's unfair. They shouldn't be able to do that. The court said, no, like you're not allowed to call the note due. Then they took it to the next step. Then they took it to the next step. And finally, they're at the Supreme Court, and the Supreme Court decided, hey, you know what? You should be able to call this due. That's unfair to you because you lent this money to that buyer, not this new one, right? So the due on sale basically just states, hey, if you switch the deed over to someone else without notifying the lender, they have the right, not the obligation,
The right,
to call the
not
note
the
due.
obligation to
Yeah.
call the note.
Banks are not in the business of wanting to take houses back. You know that. They're in the business of what? Getting their payments on time. So as long as you're making your payments on time, very rarely have I heard of that happening.
Have you ever heard of? I've never heard of it happening.
I've had one friend that had it called due, and he basically brought in private money, paid off the loan, and then.
What was the
ended up-
situation? What flagged the bank?
So that's a good question. So it was a very, very, very small local bank. And that's usually what you see is a lot of banks, and you know this too, a lot of banks will, when they get the loan, they end up selling it off to someone else, like another mortgage company. Right, exactly. They don't keep it in-house a lot of times. But the small ones that do, they're very like protective of them, right? So they see everything. Whereas like if you sell it off, like you don't care. So that's really what happened. It was a small bank. They were like, hey, like we see everything, like what's going on here? We don't like this. And, ultimately they called the note due and he had to bring in private money. But I mean, there's a ton of things you could do.
Yeah, and I'll say this. That was a great explanation. The banks, like you said, are in the business of getting money, not taking back houses. Because how much does it cost a bank to foreclose on a house? A lot. They don't want to foreclose on a house because then they got to turn around, they got to sell it. It costs them more money.
At a discount.
And as long as they're getting their payments, banks are happy. For the most part. Like you said, unless you get a one-off, and I mean, there's a million banks out there, so scenarios are endless. But unless you get a one-off, that's a small bank. That's the only time I've ever heard it being done.
Mm-hmm.
But 90% of people go through a mortgage loan officer.
Right.
That's like a bigger chain. They don't really use a lot of teeny tiny banks, you know what I mean, that do that. So by far, for the majority of people, it's a pretty safe bet.
Yeah. And at the end of the day, you're a number to those mortgage companies.
Are there contingencies like within your paperwork? What happens if the due on sale clause happens?
Yeah.
Like what are they?
It's a great question.
How do you protect the seller?
Yeah. So we state in our agreements that essentially if the due on sale clause is called, that is the buyer's responsibility, and we will hold the seller harmless for any money that we have to come out of our pocket to be able to handle the situation, right? We also have something in our agreement stating, hey, if I buy your house subject to, and the note is called due, that me and you are going to work together to try to remedy the situation first, right? And if that doesn't work, let's say we call the lender, or like we show them the paperwork, hey, we bought this house subject to, this is what's going on, here are our payments made on time. Usually they're like, oh, okay, we understand what's going on now, like we're good, right? Because like I said, if you do that with a family member, you don't see notes being called due when you give the deed to Grandpa Joe. You just don't, right? And so like that's a violation of the due on sale. Why isn't it happening? Because they don't want to do that if they don't have to. It's like, why are people, and you know this all the time, you run into people that are a year behind on their mortgage and the bank still has not foreclosed on them. I mean, if that doesn't scream, I don't want to take this house back, I don't know what does.
Certain point.
Yeah.
What are some other objections that realtors have towards subject to? How am I going to get paid my commission? Because realtors don't do math, but they know what 3% of every number is.
Mm-hmm. Yeah, that's true. Yeah.
How are they going to get their 3%?
Yeah. Well, we simply have in our agreement that, hey, here's that we calculate it. The 3% of this is this number. Let's say it's $10,000. $10,000 to be paid to agent Nick at closing. We get to the title company and they handle all of that. So
realtors,
pretty straightforward.
We're safe, right? Y'all are safe.
They're good.
Good.
I want y'all to get paid. Like, I mean, like,
everybody to get paid.
Yeah,
Everybody
absolutely.
to get helped.
Yeah,
That's why I love about real estate. It's solving problems, it's helping people
for sure.
in an ethical way.
Well, and that's exactly, and that's the biggest thing for me is educating agents on this, because there are probably 3 cases last month alone of agents that I spoke with. I know that your client doesn't have a ton of equity after we've had the conversation, and I think subject to might be a good fit, right? Here's what it is, here's some of the objections, and here's how we could move forward. And they didn't even mention to their clients about it. And you know how I know this is I called the client after the listing expired, which means the agent didn't get paid, which stinks because I would have paid the agent.
And that's why we're putting these videos out to educate the agents. Like, your job as a fiduciary is to help your client get the property sold, and we're trying to give you more tools to do that.
Right.
And to help your client.
Yeah.
You're still going to get paid, but it's not about generally you. You're taking that as a fiduciary to get that property sold. And that's a prime example. It just first expired because the agent, who knows why,
Right.
didn't bring it to their clients. So,
Yeah. And it sucks for the agent because I'll call the sellers once the listing's expired, right? Saying, hey, like, I think subject to would be a decent solution for you. Here's why. And the seller's like, our agent didn't even tell us about this. Like, I didn't even know this was a thing.
yeah.
I'll do this today. And the agent could have got paid $10,000 for that, but just because they maybe didn't understand it, or I didn't do a good job explaining, or whatever it might be, I think we just need to be more open to other options, at least.
For sure.
So I think one of the questions I get more often than I thought I would when I first started doing creative finance was, oh, well, if you're this big investor, right, and you know what you're doing, why don't you just pay cash for our property? Right? Why don't you just pay full asking price cash? Which, to us is like kind of funny, but to some people that's like a legitimate thing. They're like, well, if you're this serious, just pay cash. It's that easy. If you're this big time investor. And the reality is, if you have a 3% rate on your mortgage, why does someone think that I should go get a loan for 7-8% in this market and switch that out when I could just say, hey, let me make payments on your behalf to this 3%? It doesn't make any sense, right? And so I think for people to understand, like, what's in it for me, right? Because, I mean, it's a pretty big benefit for someone to not have to cut a $20,000 check at closing and get paid, $2,500, right? But what's in it for me? Well, I get a lower interest rate that can actually make a property cash flow in this market, right? And hold it as a rental or whatever it might be. So I think it's important for people to understand, like, why would an investor do this, right? Because otherwise it feels kind of like, oh, maybe you just don't have the money
What's
to
he
do it.
getting out of it? What's the investor getting out of the deal?
Right.
Yeah, the investor's getting a low interest rate, which means a lower monthly payment, which means he can rent it and have the equity and the upside in time. He can potentially have cash flow.
Yeah.
Um,
And
that's-
get into the property for a lot less money than putting 20% down.
Right. Exactly. Instead of putting 20% down.
Absolutely.
So that's the upside for the investor.
For sure.
That's a
Yeah.
great moment of clarity. Great point of clarity there.
Cool.
So we gotta
I think that's good for subject to. Yeah.
Cool. So owner financing is basically the same thing, except instead of the mortgage being in place, the homeowner owns the property outright. They don't have a mortgage on it, right?
Right.
And that would be essentially the same thing when it comes to owner financing.
Essentially. So to clarify, you could do seller finance anything, right? So they may have a mortgage, right? And we can get into that later. But most of the time, the people I'm working with have at least 95% equity or own it free and clear. So that's an important distinction, right? As far as how owner financing works, I could actually tell you a story of the first property I bought on seller finance. And it's actually my personal residence. I still live there today.
You bought your personal residence on seller finance.
I did. Yeah. And so I had sent out a direct mail campaign back when I was still doing mail. And Mr. Tant is his name, David Tant. We call him Santa Claus. He's got this like big beard. We're still friends today. He's awesome. And he gave me a call. He said, "Hey, Evan, I'd like for you to come look at my house. I saw your piece of mail." So I said, "Okay, Mr. Tan, I'll be over there, in 30 minutes because it's like right next to my house, right?" So I go meet with them. I look at the numbers. It's in really rough shape, right? I would say once it's fixed up, it's probably worth $325,000 at the time, but really bad shape. It was like a hoarder's house, like tough situation, like books up to the ceiling, like everything, right? And I told him essentially, hey, to come in and fix this is probably like a 60, 70K rehab. Like I have to make some kind of gain on the property as an investor, right? And so I'm gonna have to be around the $170,000 mark cash, which is what every other investor was telling me to be at as well, right? Because that's just how the numbers work when it comes to that kind of deal. And he didn't really like that number, and I understand that. He's owned it for 10 years, and it's been his only real property, and I get that, right? And so I told him, I said, hey, instead of me paying you $170,000 cash, why don't you just be my bank and I give you a higher purchase price? And he was like, oh, I don't want to do that. And I was like, okay, that's fine. But help me understand that $170,000, what are you planning on doing with that? Right? And he was like, well, I'm going to live off of it. So I'm going to put it into an annuity account and live off that, the return. And I said, well, how much of a return is that going to make you? And he's like, the account I'm going to put in is 2%. And I said, okay, so 2% of 170,000 is around $500 a month that you're going to get. He's like, yeah. And I said, okay, well, why don't I give you $220,000 as a purchase price at 2.5% interest? So you're making almost $700 a month instead of $500.
Where did you come up with the $220,000 number?
For me, I was like, I can afford to pay this because I was still getting a pretty good discount on it.
So you looked at your monthly payment and said, I can afford $700 a month,
Yeah.
which would put me at a purchase price of $220,
at
and you gave him as much as you could that you could afford.
Yeah, without being underwater on it, absolutely. Because if he's going to allow me to make payments on that and I can cash flow the property, why not give him $700 a month instead of him making $500? And he also had $40,000 in credit card debt, and he wanted to be debt free. He's like, that would relieve so much pressure off my shoulders. So I gave him $40,000, and I said, hey,
Down payment.
$40,000 is a down payment, and paid off all his credit cards, and now I pay him every single month. And
he loves you.
He loves me.
You solved the problem.
We're best friends.
You solved the freaking problem.
Yeah.
Freaking love it.
And the cool thing about that I think people don't think about is that, let's say I sell the property tomorrow or refinance the property tomorrow. What does he get? He gets his full 220 asking instead of 170.
So if you go and you put a bank loan on it, you go get a traditional mortgage and refinance it, he gets paid off.
Right.
His 170.
Yeah.
And all the money that you've already paid.
Right.
So he's making out way ahead.
He's doing really good for himself. Yeah.
That's the power of seller finance.
It is. Yeah. Both. And I think that's why.
Sometimes we cut the banks out, the people win.
Exactly. Yeah. Right. It's crazy. There's all these fees and all this stuff, and it's like you cut the banks out, and it's like a lot of times both parties can win, and that's what drove me to do creative finance. Was I was tired of lowballing people with cash offers. I was tired of it. It just doesn't fit my personality. Right. And you either. Right. And it's just not fun.
No.
I don't like seeing someone at Walmart and like putting my head down because like I want to avoid them. I want to be like, hey, like I'm still making you monthly payments, dude. How's the free money? You know what I mean? Like that kind of thing. And like, how's the family doing? That's just like how I want to do business. So this just fits really what I want to do. So yeah.
That's a great story, dude.
Yeah. Yeah.
That's a great story.
Yeah.
Love that.
This is actually how I told Mr. Tan. This is how I told the seller how seller finance works. Because initially he was like, I don't want to do that, right? I don't do seller finance.
You've been renting it, right?
Yeah. He had been renting for 10 years, and he had been...
So he already has a landlord game, but now he still gets a payment,
right,
but no responsibility.
None.
Right.
And the funny thing is he was renting it for $800 a month in Bellevue, which this house should rent for $2,200 a month, which is insane, right? So that tells you like what kind of land. Like he just didn't understand the game, and he's a
tired landlord,
tired landlord. Yeah. And he wasn't even getting paid that $800 every month. And so you have taxes, insurance. When he does get paid, he's making what, $500 a month maybe after all expenses and all that stuff, $400. So me paying him $700 a month to not do anything Like he's getting a
He doesn't have to pay. He
true
doesn't have to pay taxes.
No.
He doesn't have to do maintenance. That's all cash in his pocket.
cash in his pocket, and he's no credit card debt, right? So it's awesome, right? It's a great deal for both parties. Which is why I love creative finance. And so the story I told him, when you say the word seller finance to someone, they hear that and they're like, oh, I don't want to do that. And I don't know why that is. It's like almost like a negatively charged word for some people.
I'd say because people want their cash. They
Yeah.
want to get cashed out. I'd say that's the primary reason why is because
Good.
people are focused on the cash.
True. Yeah,
Cash now.
that's a really good point. Yeah, and I think they probably think too that it's an only a win for the buyer. Like when a buyer comes and
Also-
says, hey, will you seller finance me? It's kind of like no, you don't have the money. It's the same thing. It's like, well, if you just buy the house cash, it doesn't register. So what I told him was, I said, okay, let me tell you a story, and I told him the analogy of I had a buddy that had a F-150 red pickup truck, had like 300,000 miles on it, right? And that had been just like sitting in the driveway for 3 months, and he was trying to sell it, right? And his wife said, you know what, you need to like start posting this on Facebook Marketplace and Craigslist and all that, and really actually being serious about selling it. So he goes to Kelley Blue Book, which essentially is what, like the Zillow of cars, right? How you figure out kind of what your car's worth. And he goes there, he sees the car's worth $10,000, but he's stubborn, and he's like, no, I've had this truck for years, like this truck should sell for $20,000. So he puts it on Facebook Marketplace for $20,000. What do you think happens?
Nothing.
Yeah, no bites, no nothing, because it's not worth that, right? And you run into that a lot with houses as well. People that think their house is worth way more than what the market will actually pay for it, right? And so what I told him was, he had a friend that came to him and said, hey, you know what? Keep it at $20,000, but underneath the description just say, will take payments. What do you think happened then?
Oh, yeah, tons of calls.
Tons of calls,
Tons of
right? And the reality is he actually ended up selling that truck for $25,000. So $15,000 over what it's actually worth because he was willing to, take payments. And I told the seller, I said, that's what we're looking to do with your house. And immediately it's like a light bulb switch, and he's like, oh, yeah, I would do that.
Stories.
Yeah, because it made sense.
So here's the thing, though, and this is something you have to get over,
Mhm.
or this is a problem that needs to happen too, right? If I'm a buyer and I'm already hesitant about seller financing, me just learning about it, I'm going to go, well, wait a minute. Now I got to wait 30 years to get my money out.
Yeah.
What generally happens with seller financing? Do the sellers wait their whole life to get cashed out that deal?
Yeah.
Or like what generally are the options when it comes to that?
That's a really good question. So I would say the first option is that a lot of times we sell or refinance our properties within, I would say, like 3 to 5 years on average.
On average, do you have anything in your paperwork? It's called a balloon.
Mm-hmm.
Do you have anything in your paperwork that does that?
We
that
can.
Says that?
Yeah, we can do
So
that.
that's all negotiable and can be included in the paperwork.
Yeah. So the way that a balloon works essentially is stating, okay, so you have a purchase price of $200,000. Let's say I put $10,000 down, so I owe you $190,000, right? So I'm slowly paying down that loan, and at the 5-year mark or 3-year mark or 10-year mark or whatever we decide, there's that balloon which says, hey, whatever is left on the loan, I have to pay you in full at that point, right? And that's either by A, selling it, B, refinancing, or C, just giving you straight up cash.
So if the seller does want their money at a certain point, you can negotiate within 3 years, 5 years, 10 years,
Right.
whatever they're comfortable with
Right.
and makes sense for both parties.
Yeah.
You can put that right in the contract, and then it either
Absolutely.
gets sold or it gets refinanced, and everybody gets cashed out.
For sure. That's
That
exactly
happens all the time.
Yeah.
That's and a lot of people don't know this. Like that is like the commercial game. Like,
It is.
This building that we're sitting in right now. This is what big real estate does.
Sure.
Okay, and we're taking what big real estate does and we're bringing it down to residential.
Yeah. It's
Is
a
what-
really good
is what
point.
we're doing.
Yeah.
This isn't new. These aren't new concepts.
No.
These are just concepts that people don't know.
Right. Yeah. And it's funny because all this stuff is coming out of the woodworks now because of like social media, and it's becoming more popular again and trendy. So people think it's new, but it's like Subject 2 has been around for probably 100 years at this point.
If you're watching this and you're an agent and people want to get a hold of you,
Yeah.
how can they find you?
Yeah. So, I mean, they can find me on my Instagram at Creative Finance Guy. Okay. So that would be like the main way that I would recommend reaching out.
Send you DM.
Yeah. Shoot me a DM.
That's how we met.
Yeah. Yeah. So I love connecting with agents because, obviously, number one, it's free leads, right? Number two, I can get the agent paid a lot of times more money per year if they learn creative finance than if they didn't know it at all, right? Usually 2 to 3 times more than what they're making in commissions, which is awesome. And that's fulfilling for me. Like, it's not all about the money to me. Like, to me, like, I actually love helping people make more money and also help serve their clients better, right? And so shoot me a DM. We can hop on a Zoom call and I can explain and really answer any questions that you may have about it. And if you have a listing, like if an agent has a listing that just isn't selling, or maybe the seller's just like, hey, you know what? Like, I just really want another offer on this, and like we're just not getting a ton of bites. Call me up. Like, I'll come make you an offer and talk to your seller about what creative finance is, and I'll do all the work for you. To be frank, on that side. Good.
It's good.
Cool. Thanks, dude.
Yeah, man.
Legend.
You're a legend.
Dude.